All right. So first and foremost, I truly appreciate you guys for taking some time out of your night to come learn. Today, we're going to kind of just talk about how I create my newsletter levels, how I kind of my thought process on the stocks I like to find and kind of how I find them. So usually what I end up doing is first I kind of just go over SPY, right? I like to go over the overall index and I do my levels really quickly. And I'm like, okay, what can I possibly find this week? In this case, this is something that's very important. Monthly time chart. Can anyone tell me what this candle is? What is this candle? Yep, or do. You can either call it an inverse hammer or a gravestone doji almost, right? So either way, those are both bearish signs. And that's something we want to be super aware of, right? So that is bearish. Now, we also want to know where the next true support will be, and it's right here at 404. And since this is a monthly level, I want to deem it as such. So we have a support level at 404. And if that does not hold, our next true area would be at 400, simply because it's a psychological whole number. And I know that there's going to be a lot of participants willing to step up at that specific time frame. All right. So then I want to look at my overhead. So right here is my overhead in this general area. This is the monthly high. And then this is the liquidity in between where participants are willing to step up. And then, so now we have pretty much all of our levels to the top side and downside that can really matter, anywhere from 413 to about $400. All right. So then I would go into a smaller time frame on the weekly. Okay, where can we find some levels at? This is where we're at currently. This is a weekly level, so this is something I want to be aware of as well. Not as strong, so I'll keep it back to that level. And then this is an area of interest. So if you look here, we came into this area once, twice, and very close. So I want to label this entire area right there. So now I know that there's a strong possibility. In this case, since the price action is, the price action is below this area, this zone is now acting as a resistance zone. So participants are possibly able to step up there. Therefore, I'm not going to be looking to buy calls here. I would be looking for shorts, possible fade the short, right? Or I would be looking for calls over this level, over $407. So I know that not enter calls here until we break above this specific level. All right, so that's very important. Right, and then and now I know that, okay, if we break below this 405 area, then we can possibly go down to 404 and then maybe even 403 and lower, right? So now we pretty much have all of our real close range information, pretty much the top side information and the bottom side of information. So if we break this level, we go down to here. And then if we break above, we can go right back up to here. So we pretty much have our information. And then we also want to draw this area as well. So this is another overhead liquidity area. So if you look here, this is a zone of probability. If you're not familiar with that, I have an in-depth YouTube video. I'm not going to go into that right now. But anyway, the methodology is you don't want to just have black and white thinking. You don't want to think, okay, this is the resistance level, nothing else, right? That's black and white thinking, right? Because you're there, that is simply thinking that the stock market is picture perfect. The stock market is not picture perfect. Because in this case, if you look here, this is a prime example. We came to this region once, twice, three, four different times, right? So if we didn't have all this information, we could possibly get faked out. Because if we're only looking at this 410.50 area and we're thinking, okay, if it goes above 410.50, I'm going to buy calls. But you weren't aware of this 410.60 area and you end up buying calls and you get rejected immediately. right? So the stock market is not picture perfect. You need to understand that. Therefore, I would draw zones of where key liquidity has been presented multiple times in the past. It has to make sense though. Like let's pretend like there's a wick. Let's just pretend that this wick was like way down here. Like this wouldn't be an entire zone. That doesn't make sense, right? The liquidity has to be relatively close by, all kind of all bouncing off of each other. In this case, this happened multiple times in this specific box. So that's what I mean when I say a zone of probability. All right. Okay. So then, see if there's anything over there. Nope, nothing over there. I don't really think we're going to go back up here, so I don't really want to chart that. I kind of just chart the levels that are pretty relevant. In that case, 1 touch, 2 touch, 3 touch. Boom. Now I want to fill in this blank right here. And let's see here. There you go. And there you go. So now we have the top side levels and the downside levels. And we also, if anyone knows what this is, what is this? This is an upwards move, a basing, and a downwards move. Anyone know what this is? Awesome possum. Yep, Perdoodle. This is a rally base drop. Yep, this is a supply zone that formed on the daily time frame. This is also something extremely important that we want to identify. So we have a daily supply zone and we have overhead gap fill. So we have so if we break above this supply, then we already pretty much know our real target would be 421 over this gap fill, right? When that gap fills. So now we have our overhead liquidity. If we end up coming back up into the 415 area, we know that there's a lot of participants willing to step up. Not everyone was able to get filled during this huge down draw, and there's going to be leftover limit sell orders waiting to get filled whenever we come back into this specific box. So 415 is a massive area that you want to have marked on your chart. And then let's see what else we can find. 10-hour. I'm just trying to see if we have any demand zones or anything over there in this specific region. There we go. 6-hour. So this is a drop base rally. He's marked from the top of the basing to the lowest candle, the lowest wick. This is a 6-hour demand. And what do you know? Right at a 400 level. This makes sense, right? Clearly, participants are willing to defend this $400 region. Makes perfect sense. So now we know where our major targets are. If we break below 404, we can go down to 400. If we break above 407, we have 408.50, we have 410.50, 413, 415, and then so forth and so forth. Why use a 6-hour time frame? Because I can. And there's multiple. Instead of, if you want to even go more in depth, if you can kind of see here, I don't use the traditional default timeframes. I like to do top-down analysis. I like to see different perspectives. So I would highly recommend doing something similar. So this way you could check other things. Because the traditional 1 hour, 4 hour, and daily don't really tell you that much shit. Do we have a gap down to fill? Yes, but that's kind of far down. I wouldn't think this isn't going to happen for probably a couple weeks, maybe even a couple months. Who knows? Anything can happen in the stock market, truthfully. But I don't see any other lower gap fill. Oh, yep. Actually, here he is. Here's one right here. There you go. This is a 6-hour gap fill. Look, you wouldn't, Mr. Why do you use the 6-hour? Look at this. If you used your daily, you wouldn't have seen it. But anyway, yeah. So now we have two gaps down to fill. We know all of our areas, and that's pretty much it. Now I just would go to do some easy trend lines. We broke down below that weekly right there, right? And we actually pretty much hit the top of the little channel reject it, one super bearish candle, the weekly, and then we just fell below on Friday, and then we also printed this as well. So that's relatively pretty gosh darn bearish. And you can even look at the overall monthly volume, pretty bearish as well. So now anything can change. You know, we could easily just ping pong right off the 400 level and then just go right back up, or we can just do something like that. You know, anything can really happen. You don't really know for sure, but we have our overall level, so we're good for that. And then question in the chat is, can you explain what a gap fill is? Why is it significant? So a gap fill is pretty much, just to simplify it, it's an imbalance into the market, and markets do not like to have imbalances. Usually gap fills will get filled. It just depends on the time horizon. The time horizon could be a day, could be a month, it could be a year. We really don't know, but usually gaps like to be filled because they are considered imbalances. The market does not like to have imbalances. So yeah, but anyway, this is our SPY analysis. We kind of already have our levels right here, major levels, downside and topside. So then why do I use black and white? That's a very good question. So think about the human psychology, right? Green and red, the standard candlestick colors. Green usually subconsciously represents greed. It subconsciously represents money, something like that, right? And then red usually is fearful, maybe bearish. You know, like these subconscious, we have green and red in our brain. That means like that. But and people are too hung up on the colors of the candlesticks, but actually the colors mean nothing. Like literally the colors mean absolutely nothing. I don't know if this is a red candle. I don't know if this is a green candle. I could give a shit less. All I care about is how the actual candle is formed. That's all we care about, is the formation of the candle. We do not care about if this is a green candle or if this is a red candle. Like a lot of people see a red candle if they're in a bullet, excuse me, if they're in a call position, and if they see one red candle, they basically shit themselves, right? Whereas now I don't know what's red, I don't know what's green. All I know is this straight, you know, candle formation. So that I would highly recommend switching your candlesticks. Doesn't matter what candle colors you want. I would just highly recommend just getting off of the standardized red and green. It'll really help you subconsciously with possibly not being greedy and or maybe not being fearful. So that way you can kind of manage your positions a little bit better. Hope that helps. Hold on, I'm just going to read some chat real quick before we go forward. I wish I could change my P&L color. I like that comment. Yeah, that's another thing that I actually want to address. Literally turn your P&L off. Like, don't look at it. It's another thing that can really kill your subconscious bias, and it can really make you just, you know, think irrationally. And that's not what we want. We want to be thinking in percentages, not P&L. All right. So I caught up on the chat. Let's see here. All right. So we already have SPY. We pretty much have the overall liquidity that matters. Maybe I'll see if there's any real quick to see if there's any supply zones that formed as well in the intraday. There's one that's a smaller one, but I already have the over one. That's another one right there. I'm looking for more stuff right in the middle of the intraday. Nothing really pointing out to me. There's one. And there's a little smaller one as well. Pop quiz. What is this one called? We get the drop. We get this and we get that. There you go. Drop base drop. Awesome. Yep. So we would chart it from the bottom of the basing to the highest candle wick. And that's right there. That is a 20-minute supply zone. And then we just mark it on over. In this case, since these are larger ones, I don't really want to mark that, but since this is a smaller time frame, I want to make sure I know this, simply because this one won't hold as much merit. So I just want to kind of keep that labeled. Here's another one, another drop base drop right there. Same thing. Since these are the smaller time frames, I want to at least differentiate them just so I know, because the smaller time frames won't really hold as well as as the daily. So that's why I want to just label them. And we can also consider this one as well. This is a rally drop, excuse me, rally base drop. So you could also consider this one as well. But anyway, now we have all of our, I mean, if we're being technical, you could also consider this one as well. There you go. So now we have all of our overhead liquidity and we have the bottom liquidity. So SPY is done. Then we go to QQQ, same exact thing. We go to the monthly. Okay, what's the monthly doing? Also looks bearish. So I'm going to write that in my notes. QQQ, monthly, gravestone. All right. So then, actually in this case, since we already know that, I want to just be quicker about it. So there's the low of the 2 month. There's the high of the 2 month. There's that. This is a zone of probability that we spoke about. There's that. In this case, I believe this would be, yep, this is the zone of probability of where buyers can step in. So I want to label that as such. Okay, and then I don't really care about anything down here. This 300 level should very well get defended pretty well. So just to save myself time, I'm just going to do the ones that actually make sense. Now we have that. And then let's see here. We go on the monthly. See what else we can find. Okay, then we go to the intraday stuff right here. So boom. This is right on top of it. That matters. That matters. 2 touches. Okay. So we have 1, 2, and 3 really, really close to each other. So therefore, I want to label this as a zone of probability of where sellers can step up at, because a lot of times we had a rejection, and we had a bounce. So this area was defended previously. So I want to just be aware of that the next time the price action comes up to it. Same thing with this one. We have 1, 2, 3 times that the area was defended by the participants. So I just want to label this one as well and go from this wick all the way to this wick and then just draw it over and boom. So now we have our upside and our downside levels pretty much. So let's try to fill in this gap right here real quick. Do anything over here. There we go. So we have 1 touch, 2 touch, 3, 4, 5. And then 305, I don't even really have to look. I just know this is a psychological whole number. This is going to get defended. 306, this is another zone of probability. You look at all these different, so 1, 2, 3, right there. So this is a zone of probability. So then this is another overhead level. And then we go down to 10 hour, and now they look cleaner, right? So we just pretty much have all of our levels. We know, oops, this is blue right there. So now it's pretty much saying if we drop below 306, then we go to 305, 304, 303.50, and then there's probably something somewhere down here. Right there. Yeah. So 1 touch, 2, 3, 4. So this is another zone. Boom, boom, boom. So 303, 302 area, and then something down here as well. There you go. So I know I'm making my levels kind of fast, but I mean, the video isn't about level creation. If you want a video about level creation, I have an entire YouTube video about that. So I'm going fast about this on purpose. But anyway, there is all of our upside and downside levels. So now we know that every single one of these levels that we marked are all above the weekly time frame. So these are going to hold a lot of merit. And then, okay, let's see if we can find any supply or demand zones just to get extra liquidity. Here's a different one, rally, base, drop. So it's kind of the same exact thing as SPY daily. So now we have the overhead, and then let's see if we can find some sort of demand down here. There we go. Yeah, it's pretty much the exact same mirror, 6 hour as well. And now we have our overhead and our lower areas of resistance and support. So let me make this a different color, just since I don't want them overlap. But anyway, so on the 4 hour, so now we have same exact thing. Okay, if we break below 306, 305, 305, 304, 303, 302, 302, and 300 will probably be my max target for this week. 300 should very well probably get defended. If it does not get defended, then we go down to 297. So if we break above 307, or excuse me, if we break, 307, then we already have our overhead 308.50, 309, 310, 312, 315, and then this area will be pretty strong. This is where everything kicked off. Like this is where all the liquidity pretty much was not able to fully get filled there. So that is then creating a leftover supply zone of sell orders waiting to get placed. All right, hold on. Let me just check chat real quick, see if there's any questions. How often do you reset the levels? Yeah, that's a very good question. Now, if it is support and resistance levels, I usually reset them probably once a week. Because you know, as you kind of saw, most of my levels are pretty much created on the larger term time frames, so I don't really you know, need to refresh them as often. Whereas if it's a supply and demand zone, I want to refresh it as often as possible. Therefore, what I mean is if this gets pierced through, this little demand zone gets pierced through, this is no longer current. I need to delete that. So all supply and demand zones need to be refreshed as soon as possible. 1 second, just still reading. Thanks. You explained things well. Thanks, I appreciate that. And then someone else asked about the YouTube video. Hold up 1 sec. What is the name of the volume indicator? Yeah, sure, 1 sec. So that is the buy, sell volume total for period. This is pretty much showcasing who is in control, either the buyer or the seller in that specific time frame's volume bar. So that's actually a really, really good one to put on your charts. They have the exact same thing on Thinkorswim. Unfortunately, it's not a public script. So if you want, I have a Thinkorswim customized script for it. Just message me privately. I can send it to you. I put my YouTube video on the level creation in the chat if you want to check it out. But anyway, let me see if there's any other questions real quick. Okay, all right, no other questions. All right, so then let's get to the fun part on how I kind of choose different stocks. So something I do that sometimes people don't really kind of just, you know, don't think about it for whatever reason. I have all of the different indexes that actually matter. So what I usually do every weekend, I kind of just look through all of these different indexes and see which one is performing well / which one is not performing very well. and then pretty much go down the list. So in this case, we already did SPY QQQ. So let's see how the material sector looks. Material sector is pretty much at a key pivotal point. It broke below this 4-hour. Actually, it hasn't fully broke. Excuse me, it did. It had broke below the 4-hour little trend. So if it's not able to reclaim it, the material sector can possibly drop back down. We do have a 4-hour demand zone though, is right here. So that's something we want to be aware of. So in this case, what you would do is then you would kind of see, okay, what are the top stocks in the material sector, the material ETF. So then you would Google, hey, what is the top holdings in XLB? Off the top of my head, I really don't recall, but that's what you would do. And then you would kind of go from there, get the top 3 stocks, and then look at them and see how they look. So then you can trade it that way. So that's how I would find a couple of stocks. So then you would go down XLE. XLE is usually oil stuff. So XLE is names like Exxon, Chevron, Oxy is like the 6th one. But anyway, these are usually oil stuff. So then I would kind of just say, okay, how has this been looking? Well, I know oil has been on a massive uptrend recently, so this makes sense why we're pretty, we had that. So like example, we had this inside day the other day. Oh, what time frame was it on? I forget what time frame it was on, or is it Exxon? I forget. But anyway, we had an inside day the other day, and then we fell down. So regardless, I know XLE isn't super bullish at the moment. We are looking a little bit bearish going into next week unless we're able to hold this like $82 region. Usually I do not touch puts for any oil sector though, so I really wouldn't care about this. If you want to short oil, by all means. I don't think that's in the best interest for me, because I usually trade oil straight open breakout momentum based trades. I don't trade anything else besides that for oil, because remember we've talked about this before. Every single sector, every single stock in some way, shape, or form performs differently. Therefore, we need to trade it as such. We can't just be copy pasting however we trade mega caps and try to trade oil the same way. It's not going to work out. I'm sorry to say, but it's not going to work out. So that's why we have to understand what we are trading, what the theme is, and then go from there and say, okay, it looks like oil might, let's pretend oil is bullish. Okay, in this case, oil looks bullish. It looks good out of the open. Pre-market looks good. The volume stepping up. Cool. So how am I going to trade this? I'm going to trade this as an open breakout momentum based trade. I'm looking to scalp this pretty much. I'm not looking for any reversals. I'm not looking for any bounces. I'm looking for a straight, purely momentum based trade. That's how I usually trade oil, right? So now if you're considering maybe mega caps, I don't really do it that way. I look for more reversals or point of control bounces. I don't really like to chase the breakouts. Not in my best interest. So that's a real life example how you would trade things differently depending on the theme, depending on the sector. But anyway, so oil, it looks a little bit not the best for calls. I really wouldn't be shorting it though. So I'm just going to just set some alerts. And if it ends up bouncing, cool, maybe I'll enter some calls, but I'm not looking for shorts on oil whatsoever. Financials got wrecked recently, absolutely demolished, down 4%. So financials are just banks pretty much. Another thing that we would kind of just see, so we are coming to a generalized base, pretty much where participants are willing to step up here. As you can kind of see here, the little base is right here where participants are willing to step up. So we are kind of close to that, but we already did fall decent bit. We could see some sort of a continuation for banks. I believe the top one is Goldman Sachs. Yeah, Goldman Sachs. I think JPM's next. Bank of America. So as you can kind of see here, XLF is the ETF, but the overall, like the top three holdings pretty much do the exact same thing. All right. Just because rising rates possibly benefits the banks doesn't mean it can benefit them right this second. We don't really remember we are short-term traders. We are day traders. We don't care about anything besides what the charts are telling us right this second. Because sure, banks could be bullish, but they could be bullish in 2 months. We have no idea. Right. So we just want to play what's presented to us at this current time frame. But we do have a gap here, right here. So we could possibly just fill this gap right there. If we fill the gap, then this could be good for puts, or I'm so sorry, for calls. So then I would kind of actually just set an alert here, maybe like right here, and just see, okay, because I'm not looking really for shorts for this anymore because we fell a fair bit. But if we end up seeing some sort of gap fill and we hold the gap fill, that would be pretty good for some sort of bank names. In this case, this one is Bank of America. Bank of America is usually very, very cheap to trade. So that's another one. So I'll just kind of write that down on my list. Oil. So I kind of just go down the list and just, give myself some notes. So far we had materials, possible bounce, right? So we would go from XLB, possible 4-hour bounce. And then we would go XLE, maybe hold 82, look for reversal upside. I'm not looking to short this. Then we would go, okay, XLF has a gap down to fill. XLS, some bank names have gap down to fill. Then I would be looking for a possible reversal for this if we hold. Okay, so that's pretty much the notes I have thus far. So then we have industrials. That's another thing. We did just form a nice little daily supply zone, and we are coming to this little base area where participants are willing to step up. So, and also the other day, if I remember correctly, MMM is in the industrial sector. There is a fair bit of heavy flow on the 916. The 916 for calls, for the $200 calls. $900,000 premium came in for the $200 calls September 16th. So I really wouldn't be wanting to possibly short this because we are in this base area. So you could possibly look for a bounce also in the industrial sector. So then you would just kind of Google, okay, what are the top 3 stocks and what are the top 3 holdings? Boom, boom, boom. So then XLI inside daily base area, look for possible bounce if 95 holds. There we go. All right. So hold on, let me just read some in the chat real quick. 1 sec. Do you usually enter a zone as soon as it, actually, I'm sorry. Do you usually enter a position as soon as it enters the zone? He's talking about supply or demand, or do you wait a little bit? You always wait. Always, 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 always wait. Just because it came into the, like, that's a super misconception. So like, let's go back to SPY because we have the demand zones. So let's pretend, actually, let's do a supply zone. We'll do this. So let's pretend just because we came into this supply zone, most of the times people are like, holy shit, it's a supply zone, time to enter puts immediately. Sometimes that can work. Sometimes it doesn't work and the actual rejection comes way up here, or it doesn't happen at all. So you just entered prematurely for no apparent reason. And if it works, cool. If it doesn't work, you have to cut immediately or you're going to just waste money. So always wait for confirmation when the price action enters a zone, because just because it's a supply zone, just because it's a demand zone, does not mean it's going to hold. It can pierce immediately through that. Very, very important to wait and have confirmation. What? This guy in chat said, I'm broke, so I need trading to hit. I mean, If you need it to hit, then you should be studying, not looking for other people's signals. Just an FYI. If it for one, you don't need anything. You want it to hit. You need oxygen. You need a shelter. You need food. You don't need trading to hit. You want it to hit. Change that mentality, pal. What time zones do what time frames do I focus on for validation during trading? Usually the 5-minute. So I like to see confirmation on the 5-minute, and then I like to enter on the 2 or the 3-minute. I'm also a scalper / day trader. This is entirely different if you were a swing trader. Favorite confirmation would be a rejection / bounce off of the 200-day moving average and or a VWAP. How many candles do you check for confirmation? It depends on the time frame. It like kind of going back to that point real quick. It really depends on your specific nature. Like if you find yourself more aggressive, then you would be entering on the 2-minute. If you find yourself more conservative, you might be entering on like the 3 or the 5-minute. It's every single trader is different, so it's not like a cut and dry answer. It's anywhere you would enter from the 2 to the 5-minute if you're a day trader or if you're a scalper. How do you send me a message? Via Telegram or Discord. Can you explain VWAP? Just really quickly, because I have a video about this, but I'll answer your question. So the VWAP is a volume weighted average profile. It's basically the average of the pretty much, how do I put it in the simplest terms? It's the average volume for that specific day. It is updated every single day. Therefore, the regular standardized VWAP is only for day trading, only for scalping. If you want more of a swing trader indicator, then you would what is known as an anchored VWAP. So they are two different things. Anchored VWAP is more for long-term stuff. Regular VWAP is for day trading, intraday stuff. Basically saying if the price action is below this little line, it's bearish. If it is above this little line, it is bullish. And then it acts exactly the same as a VWAP. There's bounces, there's rejections, there's crossovers. Same thing. I already linked this before, but I have all these videos about that on my YouTube. So if you want to check it out, there's my YouTube. How can I use volume as confirmation for entries and exits? Good question. You want to look for follow through. So if we get like so that's actually a good point. So if you see some sort of a rejection here out of a supply zone and you see volume step up and you see a follow through, you see more volume step up, that's usually a good confirmation to enter a trade. My boy Kevin for the 7th time. Another comment, he says, I have $1,000. If I follow Kevin, will I make money? Maybe. I mean, it really depends. Just because he signals something doesn't mean it's going to hit. I would highly recommend investing in some sort of education with that $1,000 instead of relying on someone else for signals. But that's just me. All right. Anyway, back to the fun newsletter stuff. So we already have notes on, let me see here. What do we have notes on? We have notes on XLB, XLE, XLF. All right. So we're down to good old technology sector. And then we want to see how the hell is the technology sector doing? So we broke through that weekly trend line. We formed a daily supply zone. And we are coming into this little bit of a, right there, we have a zone of probability that of buyers in this case that are willing to step up. So this is the area that I want to see hold this specific week. So we could see something like this. We could see a bounce here and then maybe retest this supply zone and then drop. Or we could see a bounce and then retest and go right back up. All right, so we don't really know, but these are the two different real scenarios, or another scenario is we just continue back down and then we go down to here. So those are three different scenarios that can happen in the technology sector, the XLK. So then you would write those notes down, pretty much just exactly how I explained it. Scenario one, we can bounce off of 139, go right up to this daily, reject, or we can go right back up, or we can just flutter right on down. So now we have all the different scenarios that can possibly happen with the tech sector. Then you would just Google the top three, and then you would go from there. So I'll write that down real quick. I just write that down for my personal notes. All right, cool. So then that's the tech sector, same exact mentality for every single one of these. You would Google the holdings, top three holdings, and then you would just kind of see out of the three holdings, which looks the best, which looks the weakest. So whatever looks the best, you would consider that a relative strength mover. Whatever looks the worst is a relative weakness play. So whenever the market rolls over, you would look to the relative weakness trades for the the most probability, because they're already weak anyway. If the market starts to be possibly bullish, you would look for the relative strength names first, because they were already holding up well despite the sell-off. So we always want to be looking for relative weaknesses and relative strengths inside the respected sectors. All righty. Utilities, I don't really trade utilities very much, but still, you still want to know what the heck the overall market is doing. So there's the monthly low. And there's a little area as well right there. And there's the overhead. Okay. So we broke below this 10-hour trend, and we are coming into a $75 region. So same thing. I don't really trade this, but something that could happen is you would go down to here, maybe do that, then that, or we would hold here, come back up, and then do that, or we could come back up, do this, and then just go right back up. So we have three different scenarios also in the utility sector. And then you kind of get the point. This is all I do usually. I just try to figure out which one of these sectors look the best, maybe the top two, the top three sectors that look the best. Then Google the holdings, see, okay, which one looks the best. Maybe I'll take two out of the, so if I figure out maybe three sectors that look ideal, maybe I'll maybe I'll write down two names. So I'm going to have like 6 to 10 stocks I'm watching for that specific week, set alerts on them. And then during the pre-market, I'm like, okay, out of these 10 stocks, which ones look the best? Therefore, I'm going to narrow it down, because it's pretty hard for me to just, flip through 10 stocks at once. So I would that's why the due diligence, and you kind of keep narrowing it down. And okay, I see that 3 of these stocks look really, really good in pre-market today. So I'm going to focus on these, and I'll keep the other 7 and basically on my back burner, and I'll set alerts for them. I still want to be aware of what happens, but I don't want to completely focus on everything, because then it's just basically analysis paralysis. I just get super overwhelmed. So that's pretty much what I do. I do my overall levels on SPY and QQQ. I then have my indexes up here if you want to take a screenshot of this, or you can see it during the recording. But these are all the major sectors, and I just kind of flip through the sectors. I'm like, okay, what does this look like? Is it looking weak? Is it looking strong? Is it looking just not really ideal at all? And then I kind of just go from there. And then also, I want to be aware of the earnings, what the earnings names are doing. Because earnings names have been doing very, very well this last couple of weeks. So what I mean by that is, if you haven't noticed, so where are we at? So Snow post earnings run up. We had a where's the other one that did really well? Let me see here, because you can get drops or rallies for the continuation. So in this case, this would have been a great continuation to the downside. Great continuation to the downside. Chinese names was doing very well. Where the heck is it? Baba did fantastic. JD did really fantastic. So you don't want to just go to the traditional stuff. Like you want to have a broad range of watch lists. So I have the earnings stuff, whatever the next week. So whatever this upcoming week's earnings are, I'm going to have a couple of those. So on that, I'm going to have obviously my mega caps. Semiconductors is a no-brainer. Oil is a no-brainer recently. Crypto probably won't be on my list because I don't really care about crypto. I just keep it up here just for my reference point. And then I want to know pretty much what the post earnings names are. Well, so that's how I make my watch list. Do you guys have any questions? Any thoughts, comments, anything like that? I'll answer a couple questions here. But yeah, let me read the chat real quick. That is, yeah, let's address this one. That's actually probably the silliest comment I've seen all night. You're paying for this service, and he's referring to Boiler Room. So I would hope the signals would hit. Just because you're paying for a service does not mean the signals are going to hit. The stock market doesn't owe you a singular thing. It's just because, hey, let's just pretend your name's Joe. Hey, Joe, you paid for this service. Oh shit! All right, buddy. Here you go. Here's free money because you paid for this service. Like these signals are going to hit 100% of the time because Joe paid for this service. Like, take a step back and realize what the hell you're saying. The stock market doesn't owe you shit. Just because you paid for a service doesn't mean you're going to get 100% win rate for signals. Like, if you think you're going to win all the time, if you're a new trader and you think you're going to win all the time, you need to stop trading because you are going to take losses. You're going to take a fuck ton of losses. And you have to be okay with that. If your ego cannot be okay with that and you get bruised, your ego gets bruised and you're crying like a little girl after you lose a couple $100, you're not going to be a trader. Just quit. Until you can realize that you're going to take losses, just stop trading. Hope that helps. All righty. What else comments and questions we have? Let's see here. Amazon. Let's do Amazon. Yeah, everyone's favorite. One sec. Amazon got absolutely shit on. Let's see what else it looks like on the larger term time frame. So not the best monthly candle formation. We had a little bit of a gap down. We broke through that weekly trend line. We need to hold 130. If we do not hold 130, we will come down to here. If we end up holding 130, we will come back up to the initial rejection zone up here. So if it doesn't hold 130, we go down to probably like 125, give or take. If it does hold 130, we come up to about 133, 135. Hope that helps. Why trade the individual stocks, not just the index? That's a good question. Some of these, like if you're referring to like these specific indexes, some of them move honestly terribly. The overall individual holdings do a lot better, have better spreads, just better, they run easily. You can profit more. And indexes don't really run that much because it's the overall, it's the overall sector of their respected commodity. So it's just not really wise to do that. How do you reorganize your watch list? So there's little brackets you're able to do. You can, it says add section. So that's how I have all these different brackets and I kind of keep them in different columns just because everything is different here. These are earnings names. These are mega cap, semi. So every one of these are kind of a little bit different. I can't wait for you this week trading. Oh, fun fact, I am not trading this week. I will not be active this entire week. I'm going on a vacation, so probably won't be very active this week. I'm going to do pre-market analysis, but other than that, I'm not trading this week. Maybe open some swings, but other than that, no day trades for me at all. How do you avoid fake outs? I just wait for confirmation. Don't just enter prematurely. Don't enter if the stock has already ran a shit ton or dropped a lot. wait for some sort of a pullback. Don't chase out, just don't chase because of euphoric aspects, and don't chase because you're FOMOing. Wait for some sort of a pullback and you won't get faked out nearly as much. Hold on. Keep reading the comments 1 second here. All right, Tesla, yeah, sure. 1 sec. So Tesla split on the other day, and what happens usually after the split, after most splits, there is some sort of a retracement. So I wouldn't really be surprised if Tesla retraces a little bit. Usually there's a pre-run up before the earnings, or excuse me, not the earnings, the split announcement. Then when the split happens, usually stocks kind of reject and fall for a bit. So I would not be surprised if Tesla goes down to like 280 this week, or maybe even lower, maybe like 270. Anything's possible. So yeah, I wouldn't really be bullish on Tesla unless we pretty much reclaim 290. So let me write that in my notes. All right, so just to reiterate, we need to reclaim 290 for bulls. Bears want Tesla under 285. If it goes under 285, we hit 280. Amazon head and shoulders on the 4-hour. I guess you could see it. It looks a little bit better on the larger term time frames, though. Yeah, it looks a little bit better on the larger term time frame. So usually, it you want to see some sort of that's what I'm saying about like pullbacks. So you want to see some, like we fell so much on Friday. We don't really want to be blindly chasing puts here. We want to be seeing some sort of bounce and pullback. If we are still bearish, we want to see something like this, right? Because down here we don't get the best probability. We're not going to get very good risk to reward down here. We just fell $8, and 130 is a psychological whole number. We could very well easily bounce here. So please don't just chase blindly out of the open on Monday morning thinking it's going to be bearish, bearish, bearish. Wait for some sort of confirmation. Wait to see what the price action actually does, because I wouldn't be surprised if we get some sort of relief rally in the morning and then maybe just drop sometime that day or sometime this week. I wouldn't be surprised, because we fell so much. So we could see some sort of a continuation down and then the relief rally, or we could see the the relief rally, then the continuation down, or we might not even get another continuation down. We could see just a straight back up. We don't really know. So that's why we want to have different scenarios in the back of our head, not just thinking one thing only. You want to have an open mindset for sure. Where am I heading? I'm heading to Iceland. So if you know anyone that lives there, if you have any travel tips, feel free to hit me up. Appreciate it. My account is small, but every time a call/put reaches my stop loss, I have to sell, and many times shoots right up after a bit more. What should I do? Widen your stop loss, not think about the actual percentages, and look at the overall chart for invalidation. So oftentimes people just use a generic 15 or 20% stop loss. I wouldn't recommend that whatsoever. There's been so many times where if you put in a 20% generic stop loss, not looking at anything else, there's a lot of people are going to do the exact same thing. People, that's the generic thing, 15 or 20%. Everyone knows that. You're not smart or savvy thinking, oh, I have a 20% stop loss, I'm such a great trader. So many people know that. So that's where a lot of liquidity trap are, and that's where a lot of liquidity pulls are, right? So I would not just have a set generic stop loss. You want to have you want to have a range. And I made a video about this as well, but just to really quickly answer it, my range is anywhere from 7% to 30% stop loss. It depends. I don't have a specific set stop loss because every single trade setup is different. What if my entry is really good? All right. What if my entry is super, super good? Clearly my stop loss is going to be smaller. All right. What if my entry is not that great? It's relatively subpar, but the overall trade is still valid. My thesis is still fine. So I'm gonna, because I know that my entry was subpar, therefore my stop loss needs to be a little bit wider because of that. I have to plan accordingly. You know, not every trade is static, every trade is dynamic. Hope that helps. Have you ever used a trailing stop loss? Yeah, trailing stop losses are nice. Or you could also use 9-day moving averages as a trailing stop loss. They've been pretty valid this last couple of weeks. 9-day moving average, usually on the 3-minute or the 5-minute time frame. Like for example, the 5-minute 9-day moving average actually kept you in. Kind of a fun fact. One sec. I don't think I have it. Yeah, I have it here. The 9-day 5-minute moving average basically kept you in this trade almost the entire day. Just, yeah, kind of a fun fact. Am I going to post this on YouTube? Yes. Can I look at Baba? Sure. I'll answer a couple more questions. So just whatever else you got. And I'm going to end it here in like 5 or 10 minutes. How long did it take me to become a profitable trader? I don't know. 2 years maybe. Not sure. 1.5 years. I probably blew like 10 accounts. But losses lead to great learning lessons, so that's okay. So Baba, we have a little bit of a demand region right there, and we hit the head. So we need to hold this pretty much this like $100 region, $101 region, and we could maybe, because we can maybe kind of slingshot back up here like that to the daily 200-day moving average. We also have a gap to fill right here. Chinese names have been doing very well. Excuse me. Chinese names have been doing very, very well lately. So I would definitely keep Chinese names on watch over the next like week or two. Just yeah, because we don't really, just because we think it's like, oh, it's a Chinese name, blah blah blah, doesn't really mean anything, right? Because as a day trader, we don't really care about whatever the hell what stock it is, as long as it has liquidity. The spreads aren't that bad, they're relatively pretty tight. We don't care, we can trade that. That's all we care about as a day trader, is where the money is going. Hold on, maybe some more questions. Can you explain a gap fill one more time? A gap fill usually happens overnight in the future session, and then is shown and portrayed in the actual public session from market open to market close with a gap such as this one right here. And that is an imbalance into the market. The market does not like to have imbalances. Therefore, it will get filled sometime or another. It could be a year, could be a month, could be a day. We don't know. But usually gaps do get filled. They are profit target areas. What is the biggest takeaway from today, brother? Screen, prepare. Because that's another misconception. People think trading is 100%. And trading takes up 100% of your time. It doesn't. Think of yourself as a professional athlete. Does football players play every single day? No, they do not. What did they do though? They train, they practice, they watch film, right? That's what you want to do as a trader. You want to prepare your trades, you want to review your trades, you want to screen, you want to get proper, proper rough plans of what can possibly happen for XYZ stock, XYZ situation, what the theme is, all that stuff. Trading takes up the actual act of trading, like the clicking of the buttons, is 30% of your time. The preparation, the screening, the reviewing, the education, that takes up 70% of your time. So you want to start focusing more on that, and that will help you pretty much go to the next level. So if you're a 4-figure trader, you will get to the 5th-figure trader. If you're a 5-figure trader, that'll help you get to the 6-figure trader threshold. Whatever the case may be, it will help you level up. So that's what you want to be doing, is you want to be preparing your trades, screening your trades, reviewing, journaling, just practicing. That's how you will actually really become profitable and more consistent. Did I ever want to give up? Yeah, probably a shit ton of times, but I'm stubborn and I'm not giving up. Uh, 9-day exponential moving average, to answer your question. How much time do you usually wait after market opens before trading? Or excuse me, that one says taking profit. I haven't been swing trading very often, but when I do swing trade, I guess it really depends. I either take profit the first minute or like the first 15 minutes. I guess it really depends on the specific situation. But if you're talking about trading, I don't really trade the first 15 minutes of the day. It's super whipsawy, super volatile, so it's just not my best interest. What indicators do I like to use? Right here. VWAP, exponential moving averages, and that's pretty much it. How much money did I lose? Probably like 10 grand until I became profitable. Yeah, around like 6 to 10 grand, give or take. Not too sure. Yeah, that was during my first year. I lost a lot my first like 6 to 8 months of trading, and then I was like, all right, screw this. Let me get more serious. I got more serious and ended up making all that back that same exact year, and basically just went break even. So yeah. Hold on. All right, Jason, I'm gonna ask you a question. You have $35,000 in your account. Are you a new trader? Do you have any experience under your belt? How long have you been trading? And then I'll answer your question. Okay, been trading for 6 months. Yeah, so take out 30 grand immediately. Do not trade with $35,000. You're gonna lose all of it if you have no idea what you're doing. 6 months is still very new. You still have a lot to learn. Highly would recommend. Honestly, since you have 35 grand, dude, put up a couple thousand and invest in a mentorship or some sort of education, and you will be exponentially better within 6 months. You will be such a better trader if you just, educate yourself with some of that money instead of, using a lot of that money, because especially if you're newer, you probably will, lose it, honestly. Even if you let's pretend you do super well, right? Super well, and you double that. You still, technically speaking, don't really know what you're doing. So even if you double your money, but you possibly get greedy, etc., etc., you could very well still lose it all. Like a friend of mine ended up going from like $3,000 to $200,000. Didn't know what he was doing, and then ended up blowing $195,000. So yeah, definitely invest in education. Some sort of mentorship, some sort of, someone that knows what they're doing and that can kind of just help guide you and everything like that. But yeah, definitely if you have a large account, I like this goes for anyone. Like if you have a large account but you're still relatively new, do not trade with that account. You will blow that account. Like, I'm not joking. You might be thinking to yourself, nah, I'm the exception. I'm the exception. I'm not going to blow this $50,000 account. You will blow that $50,000 account. I can almost guarantee it. Like, literally guarantee it. So if you do have a big account, take out all of it and only trade with like $5,000 maximum. If you can, trade with 2 grand, because $2,000 honestly is still fine. Like you can grow an account off 2 grand. People think, oh, 2,000 is really not that much money. It's actually a decent bit. Like you can make money with 2 grand, like straight up, you can do it. Like if I can grow my account from $500, you can grow your account with 2 grand. All right, 2 more questions and I'm out of here. 2 more questions. What we got? Use pre-market data. Yes, you want to use pre-market data, please. Keep pre-market data on at all times. It will be very beneficial to you. All righty. Well, thank you guys. I appreciate you guys. Here, let me drop, because I know a couple guys were asking about kind of how to contact me and my YouTubes and stuff. Here's my YouTube. 1 second here. There's my YouTube. There is my Discord. And there is my Telegram. There you go. If you want to contact me, if you want to talk anything, if you want me to review your trades, if you want any questions answered, always happy to help. Always happy to help any specific person. Just want to see you guys succeed. Hold on. Any other questions? Do you have a video on how to do trade review? I don't, but that's a good topic. I'll make one for you. How mentorship can change? Yes, mentorships can definitely change bad habits for 100%. But anyway, just a quick announcement. So my newsletter, I've been putting in for free for the chat for probably about like 6 weeks now. It's officially going to go on sale this upcoming weekend tomorrow. So if you're interested, I'll give you a discount for it. Just send me a message and I'll give you a discount for it because it's going to go on sale tomorrow officially. But the accuracy speaks for itself. Over the last 11 months, I've had almost 90% accuracy every single week. So it can definitely really help you. And anyway, I appreciate you guys. Thank you again for listening. Hope you guys have an awesome rest of your weekend. Stay safe. If you want to talk, just message me via Discord and or Telegram and we can chat. Enjoy the rest of your night and toodaloo.